All the content contained in this webcast is for informational purposes only. The investments and strategies contained in this webcast may not be suitable for you. Please consult your own independent financial advisor before making trading decisions. Welcome back, traders. Second portion of our show, Market Movers. We're off and running with Nike.
Off and running with Nike, Joel. Trading up 50 cents now. This stock had a wild ride after hours. I'll let you give the after hours numbers there when I turn it over to you. But did trade down the whole 109 and then bounced up to 112.50 after hours. So it was wild. 110.99 is where the 4 o'clock settlement was. We're trading about 50 cents above that. The 52-week high on this thing is 112.97. That's a huge number. So if it can go, and I would expect some resistance up there for sure. What do you think, Joel?
Yeah, 112.59 is where we spiked to. We kind of had a spike up and a spike down. 112.59 is what we hit in the pre-market. Dennis, I have to concur with you on this one. 112.97. Expect resistance there. If in fact it breaks above that, that 113 level, then just everyone's just gaga over Nike, and I wouldn't touch it. Also on a day like this, when you have a nice pre-market range and it kind of nestles in, I think the close would be a really good area. As long as it stays above 111, I think you got to lean towards buying it. But if it gets below the close 110.99, you just got to think that people ahead of the earnings number, ahead of the with the breakout over 100, maybe looking to take some profits.
Earnings this morning, DRI, which is Darden Restaurants. This thing, there's some crazy people after these earnings reports. This thing spiked up to over $54. Just a few hundred shares trading up there, but that was way overdone on the stock. It's now trading 52, up 17 cents on their earnings release. They did have a little bit of good talk about their guidance a bit, and they seem to say that then in next year looks pretty good for the company. But 54 was just way, way overdone. I mean, the 52-week high on this thing is 53.81. There's no way it was opening above there. So whoever's buying this thing up at 54 in the pre-market is nuts. But regardless, 52 is where it's trading right now. Yesterday's high was 52.29. Maybe that comes into play. Hard to say. It is an earnings play, so there could be some more volatility. Yesterday's low for you was 51.34, so that could get some support. What do you think, DRI, Joel?
Maybe someone choked on something, one of their bones, and puked their shirt out there when it made that.
They really puked their shirt out. They're like, oh, the raising guides, get out. I'm going to buy Darden Restaurants, which is a beta of nothing. 3 points above the close.
Yeah, that 50, since things have settled in, Dennis, this thing has not been able to get above 52.50. Now, if you look at yesterday's range, you had a high at 52.29. So I'd use that 52.29 to 52.50. 53 really stopped this thing dead in its tracks on Wednesday. Above there, I think you go to the 52-week high, but just based on what this stock is doing right now, it could taking. I'd use this swing number 52. If it can't hold this 52, I don't think I'd hold out for yesterday if I was long.
KB Homes reported earnings here too, Joel. Symbol is KBH. They're not good. The stock is trading down very significantly. $9.45 is trading out right now. So on your chart here, obviously not showing this is yesterday's chart, or from the last 3 months, showing yesterday's price here on settlement of 11.24. But man, we just cut through a whole host of support. There is a couple of good lows here. If we go back into, and Joel knows which ones I'm going to point out here. If we go back to late January, early February, we got a low right at $9, and then the next day we had a low at $9.05. We're 40 cents away from there. We've come a long ways. So that might be where it's thinking about going to. That $9 you got to think is going to provide some support, though, Joel.
Yeah, it hit 920 in the pre-market, and now it's just kind of inching its way back up. This is going to come in at like the 975 level. I think things are really, if you do go into sell-off mode here, you're going to be looking at this 920 down to $9 is really going to be major support. This stock had a major rally since the beginning of the year. I don't know what it's based on. It's certainly not based on building new homes in Michigan.
That's craziness. Obviously, a couple stocks that might move that. Len, may have a sympathy move, and it is having one in the pre-market. 25.48. It's trading right now here, Joel. 26.12 is a close. So a couple of these other home builders might be weaker. Maybe we can do some quick numbers on LEN, Joel.
Whew, boy, this thing has been straight up since 22, and then it's the old hanging on a cliff routine here. The 26 support as it went through. I think I'd be patient and maybe try and see a rally back up to this 85 to $26 level to try and get short. But coming back on the downside, support at 25.04. But if they want to whoop the stock anything like a percentage basis on what they're doing to the KB Homes, folks, get your bids out at 23.77. Call it 23.80. March 8th low.
Another stock trading down here is GEL. They announced a secondary offering there after the bell. I haven't seen what the price is on that thing yet. It might be out. I didn't take a look. 30.62 is where it's trading right now. It seems to be settling in this 30.60 area, so I imagine the secondary price must be in this area here, Joel. Those prices often act like a magnet, but maybe do a quick technical on this GEL.
Yeah, I'm looking at this low at March 7th. We're currently trading below that. Use that 30.71 as a swing number. Below that, I'd be looking at 30.24, which was the low back on March 6th. And as you said, Dennis, these secondary offerings, they picked a good time. I mean, the stock has had a very nice rally since October from under 22 up to 33. So why not dump some more stock on the street at these levels?
TVIX, Joel. I just want to talk about it yesterday because wow. And this morning here too. Here's an ETN that's supposed to track the volatility index 2-for-1, 2 times the VIX short-term index. The VIX goes up yesterday. This thing falls 29%. It's down another 18% today. A whole host of problems here. Something that the issuer isn't redeeming shares. So now it's trading like a closed-end fund, and there was a premium in there. So that premium's immediately coming in. Whole host of stuff happening here. I wouldn't want to own this. I wouldn't want to be short it because it costs so much to borrow the stock. You can't short the thing. And if you buy the thing, it's bad. So I don't know what to say, Joel. This is just a mess.
Yeah, I mean, I just think the moral of the story is, if you look at these kind of instruments that these investment houses come up for your protection or for, protect against, volatility or not volatility in the market. I mean, there's simple ways to look at your portfolio. There's puts, there's calls, there's sell stops, there's actually getting out of things. And, when something like this happens, let the buyer beware. There's a lot of other ways to protect your investments in the market besides messing with these ETFs that just have natural decay in them, every day on the close.
Anyways, that's going to be our show here for today, Joel. Is there any closing thoughts for our listeners?
Yeah, I just like the folks out there that pay attention to the S&Ps. I mean, 1385.50 is the Globex low, and we have yesterday's low at 1382 and a quarter. If this is just going to be a bounce and run up at new highs, then that level should hold at 1382 and a quarter. If not, we could be looking at a little bit more of a correction in the market than we've seen over the last couple months. So that's our show for the day, folks, and we'll be back with you early on Monday morning.